Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Joel Elconin. We're going to be talking markets. We're also going to touch on commodities. But first things first, let's talk about some meme stocks. I should note Joel is the co-host of the Benzinga Pre-Market Prep Show, also editor of the Pre-Market Prep website, which I will post below. Joel, GameStop, again, in the news. There was a tweet that was put out that people are saying that's what drove this, in a way, kind of short squeeze into the stock again. It came into this month right around $10. It peaked recently, well, way higher than that. It's been quite the move higher again, and it trickled into other meme stocks as well, like AMC. Joel, take us through what happened this week in the meme stocks.
Thanks for having me, Corey. I could go on about it, but interrupt me at any time and ask me questions because this is a very important thing to discuss, and I want to be succinct in my discussion with it. But basically, it did start with a tweet from Roaring Kitty, who was part of, or at least may have instigated the original run in GameStop. And it just spilled over into the pre market trading on Sunday night. Now, I don't know if you know this or not, but although the equities close at 8 o'clock on Friday, Interactive Brokers and Robinhood are allowing overnight trading. So there was overnight trading on Sunday night, okay, less liquidity, and they were able to move that stock substantially even before the exchanges opened up at 4 a.m. So they already had the thing in motion by Monday. The shorts that were in it were caught. This is everyone's opportunity to get rich, and it spills into other meme stocks. The other meme stock is AMC, of course. If you want to look at it and you want to participate in these kind of moves, there's shortsqueeze.com. There's other sites that list the heavily shorted stock. The most heavily shorted one stock that I think is still going is FFIE. That thing started the week at pennies, and in today's session, it hit $3.90. It's up incredible gain. So it just snowballs. And what happened is they did get GameStop and pre-market trading on Monday to $80. $80 on Monday. And then, things started to settle down a little bit. The real liquidity came in. Another thing I want traders and investors to know is that GameStop, when the true liquidity came in at 9:30 a.m., the opening print on Monday was 64. Actually, it was Tuesday. Monday it got started. On Tuesday, the opening print was 64.83. What do you think the high of the day was on Tuesday?
At that level.
Yes, and the pre-market high was at $80. 80. And then it so obviously sold off on Tuesday, continued on Wednesday. And then another thing that you have to be careful with when you're involved in these kind of stocks, and also, and not in such a nefarious manner, but biotech stocks. When they have the rapid appreciation in stock price, the first things the company want to do is raise money, and they do an offering. Now, we know how many offerings AMC has done. That's why the all-time high in AMC is $642.65. So AMC did the offering on Thursday. And GME, the reason it's down today is like, hey, what's good for the geese is good for the gander. So that stock was actually trading up in the pre-market, in the overnight trading near $30. And then they did an offering. And from a technical perspective on GME, it did come down and fill the gap from Tuesday. Absolutely remarkably, technical trading still works. It came down, it filled the gap, and is now trying to hang in there at the $20 area. There was a gap at 2020 to 24.77. And that was filled today with a 1970 lows. Just be careful with those kind of stocks. What now you have created is a whole new set of bag holders, right? You had bag holders from before when the stock in GME went to over 120, and now people are stuck long over this thing over $60, and they're scratching their head. It's a dangerous game to play. And I said this on my show on Tuesday. PYC, protect your capital. We get in those kind of situations between GME and AMC. There were 34 halts in the stocks. 34 halts. That means there's nothing you can do until they reopen. And a lot of times it runs up, halted, runs up again, halted, then it opens lower, halted, opens lower, halted. It's just such a dangerous game to play. If you're good at it, go ahead and doing it, but not something that makes you feel all good about the markets.
No, not at all. It's weird. These anomalies coming out. Markets shouldn't function like this, but it seems like some of these guys have figured out how to get these short squeezes running, and they have an army behind them that seem to be able to just keep moving it higher. But Joel, what does this tell you about the markets then? Are markets, this obviously isn't normal action in markets, but there seems to be this capital out there that is searching for these stocks that are heavily shorted, and they are showing these large funds, I think, that these individuals can start moving these stocks. It seems uneasy, but it also seems like there are
Corey,
opportunities.
let me stop you here for a second. The retail could think that they're moving these stocks. Who's really moving these stocks? The algorithms and the institutions. Okay. Oh, you can see, this company lost so many billions of dollars. Man, there's other institutions that are on the other side of those trades that are making a lot of money. Retail got it going. There's definitely no doubt about that. But if you don't think that there's the most sophisticated algorithms and hedge funds trading this kind of stuff, then you're being naive. The retail is a part of it. And I just want to know one other thing that made me a little bit more skeptical than I already was of the move. When you had the move before, everyone was in lockdown, right? Everyone was a day trader, right? It was a whole different dynamic. Now we're not in lockdown. People are doing different things. Plus, a lot of people got burnt last time. You also have to look at that dynamic. What it says about the market, Corey, I don't know. For me, being an old guy like I am, you can't feel that it's a good thing for the market. I can't necessarily say it's a bad thing for the market, but it just takes away from the fundamentals, from earnings, from the future course of interest rates. It just detracts from the things that are important.
But that's the thing, right? It does distract investors, but I guess we just have maybe even more investors or more of these certain type of traders out there that are making and running some of these stocks. But Joel, then we look at the US markets, we're at all-time highs for the S&P, for the Dow. The Dow's almost at 40,000 outside of the meme stocks, which is again a small group I think that's doing this. Markets are doing well. The dips are being bought. This is bull market action.
Are you referring to the meme stocks or just what's gone?
Everything. The market.
Yeah, the markets, it all depends. I mean, if you're sitting on the small caps, you're not whistling Dixie, right? They're going to need lower interest rates. I mean, if you look at the Russell Index, that's nowhere near its all-time high, right? All-time high in that is over $240. So the catch-up trade is still there. The triple Qs, Tech Latin triple Qs, Tech Latin S&P, yes. In order to get the full base of the rally, these small caps are going to need a little relief in interest rates. And when you saw inflation come in steady, there's a little trepidation after the PPI number that the Fed's move next possibly could be higher. But I think right now the market's content that inflation is at least subdued and the Fed's going to ride things out. It really depends on what market you're looking at when you say things are at all-time highs.
What about commodities? Because commodities continue to do well. We have copper now over $5. We have even natural gas up over $2.50. It was $1.50 not that long ago. Gold's over 2,400. These can be interest rate sensitive markets, and these markets continue to run.
Yeah, weaker buck, right? Giving a boost to commodities. Copper, you look at what China's doing, some of the programs that they're coming out with, they're spending money. They're trying to kickstart their economy. They're trying to restore the housing market there. If China turns on a dime, and there's been some incredible moves. I don't know if you saw what the FXI has been doing or what Alibaba's been doing. If the Chinese economy gets going and they need these commodities, there's going to be more demand, right? And stagnant supply. So there you go. You have your weaker dollar and a hope for a pickup in economic activity in China. Come on, they start turning the corner, then there's going to be a real demand for these commodities.
Let's talk about what China did because they just announced easier monetary policy, trying to save their residential real estate market. They lowered the down payment requirements on first and second homes nationwide by 5% for each of those. China has been trying to step in, not just save their markets, but save their housing market. Is that a key consideration here? Because China can be such large consumers of commodities that if their central bank's getting easier, that money trickles into the commodities and markets.
And look how this is juxtaposed versus China invading Taiwan, right? We had that worry on the table, right? And it's still there, it's still a threat. I don't think that they can do all this QE. They just call Powell up and they're like, man, how do you juice this account? What do you do? And he's, I'll tell you what you do, man. Just free money, lower interest rates, flood the system with money. That's what you get. You have people that weren't positioned in China because of the fear of them invading Taiwan. It's going to be tough to them to say, okay, we're going to restore the economy while we're going to war with Taiwan. So it's a whole different dynamic that's going on, and the market is getting ahead of it. The FXI has just been such a laggard. And if you look at some of these some of these stocks like Alibaba and Baidu, if you were a fundamental investor and you were trading stocks based on their price to earnings ratio and their forward earning, you'd be like loving these stocks. They'd be like steals. Warren Buffett would be buying them, and he actually did. He actually bought Taiwan Semiconductor when it was in double digits, and he got out of it. I don't know if it was the threat of the war in Taiwan. He's also heavy in Japan. If things are calm, if the government, you see what happens when the government was going against these big companies and against the economy, you can see what could happen if they flip that script around. And they appears to flip that script.
So, do fundamentals even matter then, Joel? Should we even be paying attention to earnings, to anything other than, I guess, how central banks react to certain economic data?
Yes. Yes.
What do we pay
Yeah.
attention to then?
No, I'm saying I agree. Yeah. The central, yeah. I agree with you. You pay attention. The central banks look what Powell's done with our market with his pivot in December. Monetary policy right now is or the perception of where monetary policy is going is the dominant factor. And until things come crashing down to reality and these debts have to be repaid, it's just the same kind of scenario. If you don't follow the liquidity, follow where the monetary easing is going. And right now, you're having your cake and you're eating it too. If you don't want to invest in the market, you can get 5.5% on your money. If you want to buy stocks with dividends, you have inflation going down, so you have a higher rate of return. It's just a Goldilocks scenario, and who knows how long it's going to last.
So, how do you diversify then, Joel? You're right. If you can get 5% on your money, but quite frankly, if the markets are beating that, if you have opportunities even in commodities now that are breaking out that could be in for multi year runs, how do you go about diversifying?
Yeah, no, I'm already pretty diversified in my portfolio. Probably too much cash, which was a really great move until October or November before you had that big rally. But just spread it around. Maybe the catch up trade is there in the IWM. If that thing ever can break out above 110 and build a base at 110, go to the small caps. First interest rate cut you get, they're going to goose those. It basically has a triple top on the monthlies here. at the 210, 211 area. Keep an eye on that. Maybe throw a few dollars at China, and you'd be out chasing here a little bit. You don't have to go in and banking on long term lows are in that market. Also, how can you go wrong with tech? If you're not into tech, maybe some of these beaten down tech stocks that are come down off their highs. I know AMD has had a big move, but it's still well off its all-time high. Microsoft announced a partnership with them. The all-time high, something like AMD, is 227.30. It's trading 165, and tech wins. Tech wins when it's a lower rate environment, and these tech companies got so much cash that they win in a rising rate environment. A little diversification across the board, and also your fixed income, also cash is not trash. There used to be no alternatives. There are alternatives now, but there's nothing like being in the market and trying to keep up with the returns with market. I think the best thing, and I wish I would have done it more over my years of investing, is just go SPY, Qs, IWM. Every SPY, triple Qs, IWM. Just boom, 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 boom. Dollar cost averaging, buying when it's high, buying when it's low, and cashing out when you need to.
Yeah, sounds so easy, but right now, man, there's a lot of sectors that are winning. There's a lot of traders that are winning. Investors broadly, if you're in these markets, in a wide range of markets, you should be doing quite well. Hopefully everybody is, because who knows how long this will last, but boy oh boy, when we're seeing these kind of breakouts, and again, as you said, people aren't stuck at home. Meme stocks are still running. It's I guess even more bullish environment for these markets and for everybody who's in them. Joel, thank you so much for your time. Always great chatting with you. I hope you have a great weekend, and we'll chat again next week.
Okay, thank you.